In this video, you'll be learning about this topic.
So, for the person listening to this, we're seeing the same problems as you are, Luke. How should they position themselves, first of all, to protect their portfolio, but also to compound their wealth?
So I think it's super important for anybody listening to this to understand, I think, a couple really big pieces of context. The big piece of context, number one, is we are, I think, without a doubt, in the first bursting global sovereign debt bubble in 100 years. So nobody alive that is trading today has ever lived through one of these things to trade it. With that said, the last time one burst, the real value of the sovereign debt relative to gold of the six biggest industrial powers in the world, the US, the UK, Germany, France, Japan, and Russia. From 1918 to 1933, the sovereign debt relative to gold fell anywhere from 50 to 100%. So Germany and Russia went to zero against gold. They hyperinflated. The Japanese, I want to say, were 75%. US was 75%. France, I think, was 75 or 80%. UK was, I think, only 40 or 50% as the reserve currency of the world. So the point is when you get here to this point, it becomes the sovereigns, they're going to do whatever they can to keep themselves in business, so to speak. And the release valve is the currency. And so I think it's super important to understand that within these trading moves, this, I think, is the big gear, and you don't want to get crushed up by this big gear. And so when you talk about these types of things, you need to be overrepresented in your portfolio to things like gold, like Bitcoin, I think like high quality equities, things that will preserve your purchasing power if, as I think they will, currencies do what they did the last time a global sovereign debt bubble burst. And this isn't about, hey, this quarter's performance or this month's performance. This is about 2 years, 5 years, 10 years from now, currency debasement over those periods of time. So I think that's the first big one, is this is the first bursting global sovereign debt bubble in 100 years. The second big thing, I think, is that we are in a currency, the first major currency system changeover in 50 years, really since the petrodollar system. And you're seeing these tensions between the US, between China, between the US and Europe. And nobody knows how it's all going to work out other than to say it's changing. And you know what the winners and losers were in the old system. And so you can sort of infer that. And I guess if I said only two big things, but I think there's probably a third that's worth noting is we've never had a demographic situation like this at a time when social democracies, you're basically, I think, having sort of this social democracy promise bubble bursting as well. You're in rundown mode on these entitlements and what have you. And that, too, I think is important. So really is supportive of the first point in terms of the bursting global sovereign debt bubble. So I think these things are the big gears that are really driving things, and they're driving both the domestic economics. I think they're driving the international geopolitics. And so I think to protect yourself, I think you need to be conservative in your leverage. I think you need to be conservative in your finance. I think you do want to have some leverage, but I think it needs to be smart leverage. And by smart leverage, I mean not overly levered, ideally in productive assets or in a house where the loans can't get called, they can't get repriced. You can be locked in for long periods of time. And then being, whatever the model says you should be in bonds, I would take the under on that just pretty systemically over the next 2, 5, 10 years. Again, this is not, hey, this is this month, this quarter. But I think these are the big gears that are really turning faster and faster now.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on the next podcast episode and new investing resources.
What are your takeaways and thoughts on this discussion? Let us know in the comments section below.